Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So today I want to talk about a grand breakout, and we haven't had it, well, we've kind of had it today on the Tuesday close, but what the bigger issue I've got is the way the market is setting up. It looks like we're going to thrust into the earnings period for July, and I think we want to be ready for that. So we're going to talk about a little bit about the Fed meeting. What it did, it basically pulled the market back, and now all of a sudden the market's starting to rally, and a lot of people are fearful. I actually think this has been a nice light switch. The Fed's out of the way, quad witching is out of the way, and we've got room for the market to run. The large cap tech seems set up, and so we're going to go through some of the large cap stocks and look at that and look across the S&P 500. The breadth isn't great yet, but the weight of the breadth is pretty important, and so we're going to cover that off. And if you like the work that I do at gregschnell.com, one of the comments I got this week was some of the best technical analysis they read every week, and very insightful. So hopefully, if that's something you're interested in, you can go check out the Fans in the Stands playoff sale. Save $363 and get an annual membership at gregschnell.com/sports for just $497. And that's not a one-year special. That would continue. So anyway, if that interests you, please head over there. I'd enjoy having you as a client. Let's jump into the charts. So I want to start off, let me just start off with the member dashboard. So first of all, the Dow didn't do much today, but the NASDAQ had a better looking day and pushed up. And when we go check out the NASDAQ, this has been a pretty nice uptrend for 2 weeks already. I still have a very weak breadth data, which is a surprise. But again, market chopped around last week, and we saw the Wednesday down, Thursday up, Friday down. So it was kind of choppy, and now we're breaking out to these all-time highs. So this looks pretty strong. We're getting through that April high period. We consolidated a bit, and now we look like we're ready to run. And from a weekly perspective, our PPO has had a nice little downtrend here, and if we started to turn and break back up above it, I think that's exactly what we're looking for, is that rotation. So I want to be long and strong here. I'm trying to add to positions based on the pullback. Here's the S&P 500, and it had a weak close. It basically shot up and pulled back in the last hour, and that moved 10 S&P handles. PPO coming off a little bit, so I'm not quite thrilled with that sort of price action, but I do like the NASDAQ starting to push, and we're going to cover that off today. So the S&P has this downtrend in momentum. I do want to see this curl up and break out. So that's kind of one of the things I'm watching for. And when we go to the weekly chart, it's basically been holding up around a 4% PPO. That's nice and high. Would like to stay up there, obviously, and see if we can keep that rotation going. So one of the things just to talk about briefly is back in 07, as an example, we had a big market running up, and then we had a January kind of a thrust up, and then the market corrected for a while in the spring in the second quarter, and then made a big high in July, pulled back in August, September, and then made the final high in October. And so not to say that we're in an 07 situation, more like we've had a euphoric run, and so who wouldn't be surprised if we had I'll call it more mellow second half. We're up pretty substantially for the first half of the year, and with that, if we had a run into the July earnings period, I think that would be an awesome thing to catch. So we've got roughly 3 weeks here until that starts to kick off meaningfully, and if that was going to take place, I think you want to enjoy that rally. And then maybe we'll check our cards at the end of that period. But I'd like to kind of see this downtrend in momentum start to turn up. You see it back here, the downtrend coming from November through March, and basically we started to stutter here at the end of January, February, weren't really going very far, and then all of a sudden we broke the momentum downtrend and took off. I'd like to see that happen again, and that was right as we headed into April earnings. So watching closely, that's what I'm looking for now. So I just want to cover off a couple of things on that. So let's go into the breadth area first. And what I want to show you here is, so on Monday we had a big push, a better push on breadth, and on Tuesday it was pretty timid. So that's a little cautionary. I would like to see it a little wider, but so far that hasn't happened, and this is the NASDAQ advanced decline. And what we see is it's turning up a little bit, but we still need to start breaking out to new higher highs here and get that indicator going. When we look at the New York composite, it's doing the same thing, but it's still making higher highs. So this is still an uptrend, and that trend line is holding, so that's very good. But again, Monday with that big Dow day was soaring, and then advancers over decliners today was 270 on the Tuesday. So that's pretty strong. And again, we had a 1500 down last Thursday or Friday. So with all of that weakness, we want to watch and just see if we can turn this thing to the upside. And the way to watch for that is individual stock action, of course. I'm going to jump up to a couple of different charts here. Here is the advanced decline percentage for the S&P 1500. And in the middle, I have the 2-week moving average of this indicator. And what you see is kind of a typical level for us to bounce off of is down here around this advanced decline percentage. When it gets to minus 20, that's not a bad place to look to get long. We might get down to minus 25, but we're already starting to work our way back up. We're at minus 3.8, so we're up here for our close. You can see that we did break the uptrend in the advanced decline data, so that isn't perfect. We'd prefer if that lasted an extra day or two. So if we can start to make this turn and rotate higher here, we pretty much got rid of all of the weak technical hands, right? So we had a low that broke the main uptrend here. So these kind of 3 or 4 little jabs below have gotten people's attention, and my data is still weak on the breadth, but I'd like to see this turn back up, and if we can start getting back into positive territory, I think you want to be on board. And then here's the mid cap, came right down. This red line was here. It's been here for years on this chart. Just a typical place to look to get long. So if we open up this chart, you can just see that typically this is the normal place for us to get long once we've had a sell-off. So from that perspective, that looks pretty good. And when we go to the small caps, you can see we got down to this minus 20 level. And if I had a red line on there, let's just overlay that. So horizontal line, minus 20. Actually, I think I have to do it as an annotation. So let's just do it that way. So it's because I have multiple indicators with the same thing on it. I have the advanced decline percent here and here, but one is a cumulative line and one is a 2-week moving average. Okay, so hopefully I didn't speed through that too fast, but what I meant to say by all of that was if you have dual indicators on the chart, let's go down here to control settings. So I have the SML in a log format, right? And that is that's this price here. Then on the main one, I've got my advanced decline percent data. And you can see I've got an exponential moving average in green, so that's in here. And then I also have another indicator showing up with that same information, but I've called it cumulative for data style. And the idea behind that is that adds the day before, or adds the current day to the previous day. And we get that continuous trend. So you can see since October, we've been trending higher. And while this made a slightly lower close than that uptrend line, it's still pretty well held by the last 4 or 5 months. And as your rally dies out in terms of power, you're obviously not going to have as many stocks participating. What we want to watch for here is as you get the pullbacks and the opportunity to buy those dips, you kind of want to do that. And what I'm starting to see is a real move towards some of the technology names again. And so if that is the case, how do we play that? Well, let me give you an example that I put out to subscribers at gregschnell.com today. So here is, I'll start with Apple, and the only reason I want to start there is that chart made a pretty big move, and of course it's a $2 trillion market cap, so that's worth having. But this is the move in Apple on Tuesday. So we had a big downtrend line going on from January 2021, and we're breaking through that downtrend. If we unwind this chart a little bit and get the September data, you can see Apple made a high here, pushed up and made a high here, and some people might try to draw a head and shoulders top, but I think the more important thing here is Apple's bouncing off the 200-day moving average, now looking to turn higher. And one of the things that I particularly like is when I can draw a trend line across the momentum, and you could either draw it like this and just say, okay, we're breaking that long-term sideways trend. So we've been trending sideways for a while. We're starting to break out of that. Whatever, you could put a line here too if you wanted to. But either way, we're very close to breaking both of these trend lines. And for me, when momentum starts to improve, you can see we made a higher low here. All of this suggests to me like Apple's ready to turn higher after consolidating for 6 or 9 months. So I don't want to be too bearish on the stock. I think it looks pretty good here. And then just to go pick Microsoft, and the only reason I'm going to go pick it next is because of the size of the company. But you look at Microsoft, and what did it do today? It broke out to new all-time highs above the April highs. It looks very, very good. When we widen out the chart, you know, it's been in a constant uptrend. While Apple's been consolidating, Microsoft just keeps pushing higher, so that looks bullish. Going to look at Amazon, and sorry about the scrolling just back and forth here to get to the different names. But Amazon has been sitting consolidating almost for a whole year. Right here's July. It looks to me like we're about to break out to the top side. And when Amazon does that, we're starting to see some other trades do that. So let me just go show you Shopify. And the reason I want to show you that is this one looks like it's going to start to run again, breaking out as well. So you've got a couple of different examples of, I'll call it coincident breakouts happening at the same time. So all these large cap tech stocks look like they're ready to run. If we go look at Google, just go get it because I've already got it charted and the trend line on it. So here's Google, and you can see this is our highest close since, like highest daily close, all-time close for Google. And there's one right here pretty much at the same height. To me, this chart looks ready to break out, and I think we're going to go running into the next quarter's earnings. Look at this PPO trend line all set up to break out to the upside. To me, that's just very bullish. Another name to cover off would be Tesla. And when we go look at Tesla, I read about Tesla a lot, obviously, with all of these different ones. But here's Tesla. And we know that it's been weak since January, and it had a 7x run or something in 2020. So let's not beat it up too much. A little pullback for 6 months isn't the end of the world. So here's Tesla with a kind of horizontal support and resistance level. And if this can start to break out here, bouncing above its 200-day moving average, we're just breaking the downtrend line in momentum. If it can get above zero, I'd like to see this really start to accelerate. To me, that would be really nice. And if all of a sudden Tesla joins this party, you've got these big 6 stocks set to take off to the upside. That looks so bullish to me. I hardly want to be short here when I could see something so bullish setting up. It's that broader picture that I think is really important. And again, this group of stocks makes up more than 25% of the S&P 500, and it makes up more than 50% of the NASDAQ 100. When we look through the names, it's extremely powerful. And we see, I haven't covered off Facebook yet, but when we look at Facebook right here, the big picture on Facebook is it broke out a while ago and is just consolidating, and now it seems like the rest of the stocks are all at the same level and want to do the same thing together. So again, for me, I want to also see a a momentum curve breakout, and that looks like it's about set to happen. So you get that nice setup and bang, off it goes. Here's another example where we just had kind of a horizontal level, and all of a sudden Tesla breaks out, Facebook breaks out, and we started to move from the 280 level and eventually ended up on this high around 315. We got a lower high here as the stock went higher. So momentum is still positive, but just generally drifting lower, so only about 1%. And now all of a sudden we're starting to push to new highs again. This could break out again and take off. And I just think it's that backdrop across these top 6 names that makes them so important. And I could add in more names that are starting to set up well, but we saw good price action in some of the EV names. Some of the renewable energy names are starting to set up, and that's another whole area to look at. One of the big things, energy stocks are going higher, mostly oil and gas stocks right now. But when you get a high price of oil and gas, what that does is it makes the hurdle rate for profitable renewable energy a lot higher, and so that makes those projects more affordable. So if oil stayed at $50 and those renewable energy stocks had to be profitable, I'll call it with a $50 cost on oil, that puts pressure on them. If oil goes to 100, obviously that gives a lot more room for the renewables to shine, and they could take off to the upside. So we're starting to see some nice price action, and a few of them that I was watching today. So this is a Canadian one. It's just been setting up and basing here, but had a nice little push today, up 2%. It looks like it wants to start to break out to the upside. PPO just moving out of the zone. There's another one, RNW. And this one, starting to make this nice head and shoulders base, and looks like it's set to push to the upside. Really nice looking stock. And we can go to for solar, and this one hasn't started to move yet. There's a big downtrend line here coming into play. PPO sitting right at 0. Let's just open up the chart a little bit just to kind of make it more obvious. But all of a sudden, if this chart trend starts to kick out, I want to be long that. That looks like a great place to get on board as an example. And we've got Solar Edge and Enphase and a whole bunch of other names that we can think about. So there's a whole bunch of reasons for these other names to start going higher. The biggest thing for me is when we have all of the momentum pull back significantly. And let me give you an example of that. This is my Schnell Strength Index. I'll just go up and get it. And what this tries to do is keep track of momentum. And what you see is that it's still weak, and this is updated as of Tuesday night. So it's still weak, but I'm actually expecting everything is below the 25% level. We're making our secondary low down here, and I want to see a real thrust up. And we're heading into earnings period, which also gives me a reason to be more optimistic. So I'm watching closely because, again, I'm not getting the amount of breadth I'd like, but I'm thinking if all of these large cap names are starting to break out, we've still got strong support from the energy sector, and that whole area really, as a group, has been very strong. So now that we've had our call it consolidation, you want to go look and see which stocks are hitting new highs. So the black is the S&P 500, the Nasdaq's the brown indicator here, or the brown line. Both of those are setting up to break out to new highs, and we have very low breadth here. So if all of a sudden momentum starts to improve and all of these markets start to turn up for a nice big bull push, and again, it could be 6 weeks, 8 weeks, I don't really know. But when we get that bull push, that's what we're trying to be a part of. And so I think we're setting up right like we were at the end of March, and we headed up into the April earnings period, and we took off really, really strong. So I don't want to be on my back foot here if the market's ready to run. And both markets made a higher high today, so that's really a good reason to be positive. When we look through the S&P 500, and again, rather than get into individual stocks or names, I want to see what moved up the most. And if I just look through here, it's apparel retailers, specialty retailers. Here's Enphase Energy, renewable energy took off. Another specialty retailer, apparel retailers. Those were pretty strong. And then ServiceNow had a really big day today on Tuesday. But we're also getting other types of stocks like Live Nation Entertainment. This is just a beautiful chart. It looks to me like it's ready to break out from a consolidation period of 3 or 4 months. And I think we all know that people are starting to think about attending concerts. All of the musicians are starting to talk more and more about doing live shows again. So they're going on tour. We're ending the playoffs in some of the stadiums with full houses. Over in Europe, Wembley's going to host 60,000 people for some of the Euro 2020 stuff. All of these things are adding up to me to be a very big bullish push onto the next plateau. And as we see this breakout, I think we want to be ready for it. So my indicators are at the place where I want to be looking to buy. And again, they could get weaker, but for the most part, if I'm in strong stocks as they start to break out, that's the kind of thing that happens. So looking through the different stocks to see what is going on. And again, one way to do that is to just go through and highlight like that LB chart. That looks like it's just consolidating and ready to break out. Here's Etsy. Pulled back and now it's moving to a new 1 month high. Cintas, nice breakout on that one. Here's Twitter, broke the downtrend today, setting up to go higher. Tractor Supply, like these are really nice charts in here. And so I'm looking through to see what's going on. This Enphase has broken the downtrend, wants to start heading higher. Nvidia off its earnings, call it 650. It's now 750. That's been $100 move in a little under a month. Netflix has been, you can just see that 475 appears to be support. It's making new 1 month highs today or 7-week highs today. Really a nice push. Best Buy, that chart doesn't look that investable for me just yet. Ball Corp, this one had a huge uptrend in 2020, taken 6 months off. Is it ready to make the turn? I'd probably want to do a little bit more work on the technicals. But when I see a chart like this that's extended over time, I want to go get the weekly chart. And how do I look at that? So first of all, the things I want to see is the stock finding support around zero? And if it is finding support around zero, that's a good place to get long. We have the PPO sitting right just under zero, and it looks like it wants to turn up. And here's a kind of a second bumper. There's a second bumper here, a second bumper here. And those look like pretty excellent places to get long, actually. I'd be thrilled to take on every one of those. So in here, I've got a downtrend in momentum. Here, I've got a downtrend in a downtrend in momentum and a downtrend in momentum. And I actually like it when I get that one wave where it tried to run and then failed. And then on the second one starts to move. So, I want to catch this run. I want to catch we're here in July. I want to catch this run. That's the kind of thing we're looking to catch. And so when I see these stocks all starting to get set up and in the right posture, full stochastic down at 20, starting to turn up, has given us a positive signal cross. I don't know if you can see that there, but this number is now positive, so it's moving above its signal line and giving us a buy signal. I think the CEO was on, I want to say Kramer or something like that a couple of months ago, and he just said, "Hey, we're so busy, we're literally growing leaps and bounds inside the company." Now that doesn't sound like a place I want to get short. So you've got this nice double bottom setup after a pullback from 100 to 80, 20% off. And heading into the second half of the year, I'd like to see this stock run. So I don't see any real reason not to kind of be looking for opportunities like that, and whether it's a pullback. And then one of the questions would be, well, how do we find those stocks, right? And so you could do anything. You could look for anything in terms of momentum. I like to look for whatever, let's say a PPO turning up, and you can do that on a daily chart, or we just had the weekly chart up. And the PPO hasn't quite crossed yet, but it is trying to turn up, so you might have to wait a few weeks to get it on the weekly. But just that simple little clue, and at least it draws your attention to these charts. It might not be a breakout you want to buy because it's still making lower highs. But when you see this, well, actually this is the first higher high on the chart since the $94 level. Every week it's made a lower high, and this is the first one that it's making the positive turn. So that's a pretty good clue as well. So you can look for higher highs, you can look for PPOs turning up, you can look at new 52-week highs. And one of the ways to do that really easy, in case you haven't found it, is over on Charts and Tools. You go down here, and there's all different kinds of alerts and stuff, but one of the big ones here is predefined scans and new 52-week highs, 482 of them. The New York Stock Exchange, 142, the NASDAQ, 67, the Amex, 33. Here's 291 mutual funds making new highs. And this is the India stock market. This is the London, the Canadian markets, over the counter. Anyway, you can go in and check out whatever you want. Here's strong volume gainers, and you can go just click on that, and it's going to give you a list of charts. So you can go see these names. To me, we're set up at this bottom. We got all of the large cap techs. Even if you just buy the large cap techs as they break out, you're probably in good hands. But if you want to start to find something with a little bit more up thrust, perhaps there's some other ways to play it. Anyway, here's, so these are strong volume gainers. Look at the scooter ranking, 98, 86, 67, 83. The S&P growth ETF, 83% on the scooter ranking. And that chart's just breaking out to new all-time highs. That just looks pretty bullish, right? So when I see opportunities like that, it's definitely... I want to at least try to buy the market as it's breaking down. I know Thursday and Friday probably put a lot of fear into people, and that's supposed to be what it does. It makes people spit out their stocks and give them to other people with stronger hands and turn. And my data got really weak last week, so I was saying, you know, we're in the lower zone. You want to be watching for breakouts, building your watch list. Well, Monday was big, Tuesday was good. We're starting to get that push. And again, I think anytime you get that opportunity, that's a real buy. So here we have this big volume bar, and I hadn't looked at this before, but look at when it's coming in, just as we're breaking out to new highs. And then when did this volume bar come in? Right on the lows. And when did this volume bar come in? Right as we're breaking out to new higher highs. So there's some people putting some money to work. 7.5 million shares at $62 today. It says that's not a residential buyer picking up that stock. So if the market's ready to go higher, if you're ready for the market to go higher, I think one of the big areas to look at is just stay in the large cap techs. They look like they're very good. Alternative energy is going to do pretty well if all of a sudden, as oil costs go higher, they go higher. I still like the oil space. I'm not going to carry on any more about it, but it's been unbelievable. And I think it's still got lots of room to go. The inventory data tonight was really solid, and we'll get the Energy Information Administration data tomorrow morning, and I'm expecting that to be just as bullish. So anyway, it all looks to me like we're making a run into the third quarter or the July earnings period, and for that we'd like to be long. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV YouTube page and on StockCharts On Demand. Thanks, everybody. Have a great week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.